I saw a great quote from David Havens of Imperial Capital a little earlier. He said that the results are literally, and I'm quoting, worthy of the excitement caused by a white Toyota Corolla motoring down a very slightly curved road at 38 miles per hour in a 35-mile zone. In other words, things are pretty good, nothing major to write home about.
Right, that's a pretty descriptive quote. Yeah, it was kind of boring, and I think the big thing to note here, and one of the big explanations for the drop in shares that you're seeing right now is that even though they did beat on FIC, it actually there was this 350 million gain that if you X that out, it's actually worse than what analysts were expecting. And that's something that we're going to be reading across to all the other banks this week, because the banks, most of them were invested in Tradeweb, which IPO'd in April. They'll probably also have, gains in their fixed income trading that, on a year-over-year comparable basis, if you exit out, trading didn't look as great on the debt side.
No, it definitely didn't. And the other thing that didn't look so good was M&A revenue. And there was plenty of M&A happening. Why did Citi not capitalize?
Well, I guess they didn't get, the mandates on some of those big deals. But I know analysts are going to be really looking forward to hear what, Michael Corbat says on the call right now about what their future pipeline looks like, whether they have, some other deals up their sleeve that could help make that number a little bigger next quarter.
Did anyone point out that delinquencies were up and that this might portend something for the U.S. consumer?
Yeah, that is something else that people are looking at, because we're kind of at this turning point where banks, that have benefited from rising rates, now that rates are projected to fall, the big question is, what does that mean for net interest income? And, so far the strength of the consumer has been something that's really, pushed the banks through. But seeing these increases in, in credit costs and decrease in credit quality it's probably not a good thing for what's coming.
No, and it was a major increase. I mean, 15% increase in credit costs. How did that happen? They did manage to keep net interest margins around the 270, 267 mark, so that was good.
So I think, I didn't fully see what they said, but I remember them talking at one point about how some of their promotional credit card, costs had rolled off, and so that's why this is just a typical seasoning that you would see at this point in the cycle. It seems like they're not too concerned about it, but, we'll see what the other banks, report and if they have similar trends.
Now, the consumer bank revenues there were up 4%, not terrible, but at the same time, you might anticipate something a little better than that. What is Citi going to do in order to increase revenues? Because after all, cost efficiency is now under control, even better under control than analysts were anticipating.
Right. Well, so that is, one of the levers that they still can pull. It's something that analysts have been waiting for them to use, and this quarter, their expense cuts beat analyst estimates, and looking forward to next quarter, we'll expect, maybe some more of that, and yeah.
What did Citi say about how it's going to combat this sputtering FICC business?
Are you referring to them talking about? Well, I'm thinking about them talking about Deutsche Bank's exit from equities trading and how that's something they could, capitalize on. Something that other banks as well have talked about potentially seeing, their weakness as an opportunity, not only in talent, but also, to win over some clients.
Well, exactly. I mean, there's going to be some business up for grabs, and clearly Citi needs some more market share. How will they go about doing that? I mean, is there any differentiating between the big banks at this point on that business?
Well, yeah, I mean, especially with MiFID, one of the things that banks are having to do in order to differentiate themselves, now that they have to break out research and execution costs, in order to actually differentiate themselves, they have to show that their trading execution is better. And so that requires huge technology investment. Citi invests $600 million per year in that. And so while, they might have some pressure or desire, the urge to cut costs there, that's a place that, we'll probably not see them cut costs, because in order to stay ahead, they have to keep up their tech investments.